Fairly quiet at the index level, and you shouldn't expect much more given the fact we are heading into a long weekend and the traders would be a bit skeptical to carry forward too many positions there. But nonetheless, we're just 20-30 points away from the all-time high levels on the Nifty, but we have been fairly range-bound throughout the trading session today within a narrow band of 30-40 points. The broader markets are clearly outperforming today. Take a look at the mid-cap index, up almost 1% in the trading session. There's a bigger gap as far as the small-cap index is concerned, and even if you look at the advanced decline ratio, that is where all the action is. And talking about action, it's clearly in the defense, capital goods, infrastructure kind of names. Case in point being BEML, which is up almost 17%. Musgao Dock, a rally of 17% on that stock. SKF, Garden Reach, even the ABB, Siemens, Cochin Shipyard of the world, Data Patterns, Paras Defense, all of these defense stocks are fairly active, and the reason is the commentary coming in from the defense minister as well, talking about the export potential for almost 50,000 crore rupees. We'll play that soundbite shortly for you. Separately, of course, what's coming under a bit of a scanner is the entire auto space. So that is one of the top gainers today, led by Bharat Forge, which is higher, and then you also have M&M, which is sitting at life high levels. In fact, that stock has managed to surpass the market capitalization of Tata Motors, but it's a tug of war between the two of them because Tata Motors is not far behind. Tata Motors too is now sitting with a gain of almost 1%. Reliance, HDFC Bank, these are some of your other top gainers, but clearly what's on the back foot today, Aisha, is only the IT pack, to be honest. So TCS, Infosys, fairly quiet, and then you have SBI not doing much today.
Oh yeah, absolutely. And just taking a leaf from the conversation as well on the entire IT sector that we had this morning, it seems like the IT recovery is going to face some headwinds, and it's going to take some time to come, definitely. But that said, just your profit taking is what you're seeing, because even FMCG, which sort of withstood the verdict day Tuesday fall, that also has been coming off. Even ICICI Bank, for I think the last 2 days, if not more, ICICI Bank has been somewhat stalling. The rest of the banking pack may be doing what it is, but some amount of profit taking clearly visible there. Even L&T today, which has really been one of the leaders of this last lap of the rally, that also is lower in trade today. Having said that, there are still no deep cracks that are emerging in the market. TCS is less than 1.5% lower. And Adani Ports, on the other hand, 2.5% higher. M&M, Anisha just flagged off, over 2% of a move. Shriram, of course, has got to be the star performers of this week amongst the large caps. Another near 2% in trade is what it's sitting on right now. Eicher, Titan, Bajaj Auto, SBI Life, and HDFC Bank continues to hold up as well in trade. But let's bring on more our chartists and figure out what is it that they're making of the trading session so far. Kunal, yet another quiet day?
Yeah, yet another quiet day for the markets. Good part is that the VIX is still falling to 12.7 for the India VIX. That probably could help the course of the index stabilize more further going forward, because I would believe that with VIX maybe coming back towards, say, sub 12 to 11 mark, say over the next couple of days, we could probably see another 200 to 250 points as an immediate upside for the index, and that hurdle around the 23,500 mark on the spot levels, I think that could be taken out for the index. The good part is that even if the indices are consolidating since the last 4 to 5 days, the action is more towards the mid cap, small cap end, and the market breadth has opened up quite well. Many underperforming sectors are also making a strong comeback, and I think that's the positive sign for the markets overall.
Okay, point taken. Daljit, I want to discuss the defense pack and the industrials pack with you, but before that, let's listen into the soundbite coming in from the defense minister who took charge of his ministry yesterday, Mr. Rajnath Singh, and he talked about the continuation of policy plus the export push.
जो हमारे पहले प्रायोरिटीज़ थी वही आगे भी हमारी प्रायोरिटीज़ रहेंगी, और भारत की अभेद्य सुरक्षा और साथ ही साथ भारत की अजेय सेना और हमारे सैनिकों का कल्याण, ये हमारी प्रायोरिटीज़ में विशेष रूप से शामिल है। यानी हम चाहते हैं कि सशक्त भारत का निर्माण हो, आत्मनिर्भर भारत का निर्माण हो, ये हमारा उद्देश्य है। और साथ ही साथ रक्षा उत्पाद में हम आत्मनिर्भर बने, ये सबसे बड़ा उद्देश्य हमारा है। और इस दिशा में एक मंजिल हम लोगों ने तय की है, और आप सब लोगों को मालूम है कि 21,000 करोड़ से अधिक का हम लोगों ने एक्सपोर्ट किया है, जो कि एक हिस्टोरिकल ये अचीवमेंट है। और मेरा तो टारगेट ये है कि इसको हम कम से कम 5 साल समाप्त होते होते 50,000 करोड़ से ऊपर ले जाएं, ये हमारा उद्देश्य है।
The Defence Minister talking about the export potential of 50,000 crores from India. Diljit, what's the say? Yes, the order books of these companies were quite solid. The question was on the execution and then the valuations. Would you still buy afresh?
Yeah, good afternoon. No, I don't think for buying fresh, you will have to look for some differentiated ideas. Maybe within the pack, if you can find something which is a supplier to somebody or which is doing some particular component, some parts, or some kind of services that they are offering. So those kind of niche ideas one can still look at. But the frontliners, I think they're all trading at very lofty valuations. Yes, there is an execution happening there. We have seen numbers coming good this time. FY24 numbers were good for all of them, and their order books are also very heavy. But to assume or extrapolate that this similar kind of execution and similar kind of order book will stay for next 3 5 years, which the stock prices are saying, I think that will be too much of expectation. So one has to be very cautious here. If you are holding, obviously you have no reason to get out of it or book profit. But if you are not holding or if you have missed out something, then just chasing the momentum will not be a good idea. You have to look for some ideas which are indirectly linked. No, so for example, there's a disclosure, one company we have in our portfolio, which is more into auto and other things, but also a coming up player in the defense. So we picked that up at around 30 time multiple or 25 time multiple. Now that multiple is getting re-rated to 35, 40 times. So that's the way you can play maybe some of these ideas. But otherwise, the frontliners, I think now they're all valuation wise, we are not comfortable.
Okay, that's really the take coming in on where is it that Daljit is seeing opportunity within the defense pack. But Kunal, what about the charts? Because, just when you think the rally is kind of overdone and peaking out, it's completely sort of deceives you.
I think the last week's correction for defense stocks actually got the indicators for many of these stocks to neutral to an average territory. So, the overbought nature of the charts which was there for these stocks lingering over the last many months, that got corrected in the last week's correction. I think the fact that these stocks were, very slow paced to move up higher and recover, I think that added to the positivity for the indicators to stabilize. In fact, now many of the, charts like for example, Mascot Dock, Cochin Shipyard, GRSC, HAL, etc. I think these stocks have been making fresh highs for themselves, but the indicators are nowhere near their previous tops. And I think that could probably add more fuel to the rally going forward. BEL and HAL are the two picks which I would still continue to recommend at current levels.
Okay, point taken. So that's a take coming in on defense stocks. Last week was perhaps the opportunity you should have bought in. But what about industrials, Daljit? Again, the likes of ABB, Siemens, they're not cheap by any yardstick. They never have been, to be honest. And even the other manufacturing names, the likes of Timken, SKF, all of them are joining the party. Even Craftsman Automation, the OEM basket, the entire theme of manufacturing. How are you looking at, ideas in the manufacturing theme, whether industrials or auto anchors, etc.?
This is a sector where one has to be, and it should be a good part of your portfolio. And we are also holding some of these names in our portfolio. Of course, not the big ones, some are smaller ones, because our portfolio is designed for mid and small cap. So we have to forego the larger ones. But still, I think the sector has a lot of tailwinds, a lot of things happening there. And when we are talking of Atmanirbhar and all these PLI policies and manufacturing being given the importance, this sector has a lot more to go. So I think here there will, and good part is that besides these 5-10 names which you just took, the top ones, there are many mid and smaller companies where also one can look opportunity. So for stock pickers, there could be a good opportunity there in this sector.
Okay, a bunch of other stocks which are in focus this afternoon. You've got Endurance Tech. The management commentary has been pretty smart from the presentation. They're targeting the four-wheeler segment revenue to increase now from the current 26 to 45%. So that's something definitely that the street is liking. Nykaa, this has been quite the underperformer of the sort of newly listed names post-COVID. And their FY28 vision is what they've indicated. They're saying that the retail GMV growth is expected at about a 40% CAGR for FY24 to 28. They're saying that they are aiming to reach 3 to 5% EBITDA at scale as well. That stock today, of course, is holding out quite smartly as we speak right now. Daljit, any of these sort of, retail plays, if I can call it that, stories that you're tracking, Nykaa, etc.?
Actually, we are discussing some of these names in our internal team. We want to increase the exposure to consumption sector as such, because that was the sector which we were underweight, significantly underweight. In fact, we just had one stock in that space. So we wanted to increase to at least 3-4 names there. And when we are talking of consumption, then these tech plays also come into that picture. Now, only thing is that we have to think differently while valuing these companies from the traditional way of doing things. We're talking of FY28 and these kind of CAGR numbers with such thin margins. What kind of valuation you would like to give? But I think here the game is what is the potential, what kind of numbers they can come over a period of time. One of their peers, Zomato, has already shown that if things go right, very soon they can come into profit and the profit number can be very large. So I think people will derive some conclusions from that and take this theme forward. We are evaluating some of them. As of now, we are not including any of these companies.
Taken. So that's the view coming in on consumption and Nykaa. But the other new kid on the block perhaps could be Hyundai. In fact, we understand that the DRHP will be filed perhaps today itself. The IPO papers, the company might be filing with SEBI today itself. And then it is likely that the IPO will hit the street very, very soon. We posed this question to a couple of our experts as well. Listening to what Abhishek Basumalik had to say on this IPO and the implication for the entire industry.
There are two parts to Hyundai listing. One part is obviously, the auto sector doing well and, that part, which is obvious. I mean, definitely auto sector is doing well. We are moving from ICE-based, sort of vehicles to EVs, to hybrids and things like that. So that transformation is happening. But the other interesting play here is that the premium that Indian companies are getting vis-a-vis foreign parents might actually see that a lot of interest from actual MNC companies to list their subsidiaries in India, right? So Hyundai is probably an harbinger of that, but you could actually see more such MNC players coming in and listing their companies in India because of the premium that Indian stocks tend to get.
Back with closing trades right here on 80 now. Well, the index may be just about very quiet, still holding above the 23,400 level. Look at names like ABB, look at names like Siemens. They're both sitting on some solid set of gains. ABB now higher by 6.5%, Siemens higher 5%. Then, of course, you've got a Cummins as well, which is higher by about 4%. L&T may be taking some profits off the table or seeing some easing off. That stock down by less than 1% as we speak right now. Let's welcome on board Vinay Rajani as well to talk about what he's seeing on the charts right now. Vinay, afternoon. Let's start off with these two names, ABB, Siemens. What big movers today?
So this entire capital goods segment has been performing very well, and ABB has registered a new all-time high with a significant volume. Stock is up by 7% right now. The momentum is back after 4th June. We have seen that this has absorbed all the supply and recouped all the losses and now trading at its all-time high. So not only ABB but entire capital goods segment like Cummins India as well as Siemens and other MNC stocks have been performing well. So yes, the entire sector is performing and ABB and Siemens still looking good. And the way they are closing today, I think next week also this rally should extend. So very strong setup technically, at least for the capital goods segment. So ABB, Siemens, in both the stocks, I have a bullish view.
Okay, so that's a view coming in on ABB, Siemens, some of these big buzzers in the trading session today. Separately, it is Chemplast Sumnar, which is up almost 10.5% because of the news of some import duty coming in on certain of its competitors. On the losing side, however, there's Aegis Logistics, which is down. Zensa Tech is coming under pressure. And even on the gaining side, there are names like Honeywell, Concord Biotech, Polymedicure. In fact, pharma as a space also has been decently active. Suven Pharma, Kunal, of course, is reacting to the news of the acquisition. But even other names perking up a bit.
Yeah, it's a sector which is again getting back into a, I would say, a mild breakout move. I think Cipla, the last I had seen, Lupin, etc., they had done reasonably well for themselves. And I think over the last 4 or 5 days, there have been slight breakouts on the hourly charts. I'll call it slight breakout because it was more visible on the short-term time frame charts. That could probably maybe lead into a rally of 3% to 5% swing into these kind of stocks. Biocon, for example, that's another name which I've been bullish on. That's a stock which has been a bit more stagnant at the 340 levels. Glenmark Pharma has done exceptionally well. Zydus, I think the last I had seen was also trading with a positive bias for itself. So yes, many of these pharma stocks are looking strong on the charts, but then they are going through a very slow-paced rally for themselves. So I think it's more suited for individuals who are looking at a time frame of 15 days to 30 days approximately, with a swing possibility of 3 to 5% on the upside.
Right. Okay, that's the take coming in on some of these buzzing names. Balrampur Chini, though, is seeing some profit taking strangely today. That stock is down about 2.5%. That big move in sugar, which happened after reports of an MSP hike, which perhaps could come into the play, or export, exports being allowed as well. That seems to be sort of coming off. Even names like EID Parry, although it may have recovered and jumped back into the green, but significantly down from its previous highs. Vinay, just come on some of these charts. I mean, Balrampur Chini, for instance, does it seem like the profit taking could last longer?
I think this is a running correction in the overall bullish trend because on 4th June the low was 352 and yesterday in today's session itself it hit a high of 445. So it's after a stellar rally, it is just into a profit booking phase. But overall, I see a strong support in the zone of 450 to 420. So there could be some correction in the coming days, but overall trend looks very strong. And this was the stock which actually took lead when sugar started moving up in last couple of sessions. So Balram looks strong positionally. This is just a profit booking, we can say, but in next week, anytime soon, around the levels of 415, 420, stocks could find support and resume the uptrend. So we have a bullish view on the entire sugar space, and Balram is a large cap sugar stock, we can say. So view is bullish, and buy on dip should be the view for the stock.
Just flag out some of the buzzes, and since we are talking about pharma, so not just Concord Biotech and Suven Pharma, in the last few minutes there has been an uptick on the likes of Fortis. Piramal Pharma has inched higher. You also have other names from the pharma pack and even ancillaries doing quite well in the trading session. And the other one that we were just talking about some time ago was also Nykaa. It was fairly quiet when that presentation actually hit the screen, which happened early this morning. And we were all wondering why, despite a very strong commentary, the stock wasn't reacting. But in the last few minutes, it has managed to see quite a bit of perk up. That stock is up almost 4%. But Daljit, the other space I wanted to discuss with you is the corollary of the consumption that you were talking about, GMR Airports. Of late, there has been a lot of positive commentary around it, right from brokerages to the management commentary in terms of the approval for the merger which has happened, the tariff hike which is on the anvil, and the fact that the company is looking at simplifying the structure quite a bit, has brought down debt, and then of course there's a tailwind of overall rising income and the travel need. Would you be a buyer in the likes of GMR Airports and the other travel related names?
See, we treat this as a part of our infrastructure portfolio. So when we are very bullish on infrastructure as such, so which consists of everything, roads, ports, airports, everything. So if you are bullish that GDP will grow at such a space, and if government push will be there on all kinds of capital expenditure, then obviously these things fall in place. And GMR Airports has a particular space because it also is a kind of a indirect play on air travel. So, and we know that the way air travel is rising, the way Indians, even small cities, tier 2, tier 3 cities are getting airports. So obviously there is a lot of potential in this space, and therefore there's a lot more potential for these companies to make profits. Stock is at, I think, 2008 or so, it was one of the most favorite stocks of everyone. And then for next 15 years, it didn't do anything. Now they have learned some lessons. They have done some restructuring, cleaning up of books. All of that is now, I think, in place. So I guess there is a big rally in front of it now. Disclosure, we are not holding as of now.
Point taken. Thanks, Aljit, on that note for joining us today. But time now to take the closing trade ideas. Kunal, what's the closing trade idea? And if you have a view on JMR Airport as well?
So I'm bullish on JMR Airport. In fact, that's a chart which is now started to look into a breakout mode. So the stock, I think, for the last 3-4 months had been going into a band of consolidation, just around that 89-90 mark. Today, for the first time, it looks like the stock is inching towards a breakout. Volumes are also on the higher side, so it looks attractive. Would look out for buying the stock at current levels, and in case if there is any kind of a mild dip towards that breakout zone around the 89-90 mark. In terms of closing trade, I'll go with the PSU banking name. PNB is something which has started to look very attractive on the short-term charts. The stock trading at 127.28 plus mark. I would look out for a short-term trade and targets in the range of 135 to 140.
So PNB was the stock that
Yes,
we're
PNB.
talking about from the entire PSU basket, which he likes right now. But Vinay, what about your closing trade idea?
Yeah, so basically, as you discussed about the pharma stocks, yes, I also see some strength coming back in healthcare and pharma index, and there was a breakout from the consolidation in the both the indices in last session, and the follow buying is coming. So one of the stock from the pharma space I would choose is the Strides Pharma. Strides Arcolab was the previous name. So the stock can be bought around 977. Stop loss can be kept at 950. And on the upside, I see a target of 1020 for next 2 to 3 session. The another stocks which I like from the PSU space, the shipping corporation. So entire shipping space has been performing very well. And today I can see a clear cut breakout on the charts on the shipping corporation. So to around 273, 274, one can go long. 268 should be the stop loss, and 282 should be the short-term target for next 2 to 3 sessions. The third pick I would recommend is the Cummins India from the capital goods space. So around 3840, 3850, one can go long. 3780 should be the stop loss, and 3950 should be the target. So these are the three ideas I would like to go long for next 2 to 3 sessions.
On that note, let's take a very quick break. When we come back, the last half an hour of trade this afternoon. And of course, here's a programming note for our viewers. ET Now is celebrating its 15th anniversary with a landmark event called the ET Now Leadership Dialogues, from keynote address by RBI Governor Shaktikanta Das to KK Mistry, Dinesh Kumar Khara, Ashish Kumar Chauhan, Utpal Sheth and Manish Chakhani. You can tune in to the channel at 3:30 p.m. and catch the action live.
Okay, it's the ring of the fresh record high on the index. We just had that figure a couple of days ago. So, but nonetheless, we are at least 23,488 and very close to that 23,500 mark right now. So, it's the ring of the fresh record highs on the Nifty right now. The mid cap and the small cap indices, as it is, were hitting fresh record highs on an everyday basis. And now there's a fresh record high coming in from Nifty as well. Let's take a look as to which are the companies and the stocks which have actually moved high in the last few minutes. It's Reliance, which has actually managed to perk up. You also have HDFC Bank, M&M, Titan. They're all holding up with decent gains and contributing to the efforts of the bulls today on the street. So a ring of fresh record high at the index level. But let me take it across to Ansh to get a sense as to which are the big price volume buzzers right now. Ansh?
Yes, so ICICI Lombard will be the first stock in focus as the stock has given a breakout from its horizontal resistance zone with volume of over 8 times its average trading volume of last 20 session, indicating very strong participation in today's breakout. Also, the stock has touched record high level as well. Apart from this, Indian Hotel will also be in focus as this stock has also given a breakout from its horizontal resistance zone, which is around 590 level, touching 1 month high level as well. ABB India is also in focus as the stock has actually surpassed above its key pivot high of around 8,700 level. In addition to this, the stock has also touched record high level with good volume. Lastly, Siemens will be in focus as the stock has given a breakout from its horizontal resistance zone, which is around 7,400. Also, the stock has touched record high level with good volume. Lastly, apart from this breakout stocks, there are high chances of Canara Bank and Balrampur Chini getting into ban list tomorrow. So keep an eye on the stocks.
I just quickly wanted to see what the stock of Indus Tower and Vodafone Idea is up to, because there's important news flow on those counters. Let's pull up both those charts. We understand that Vodafone, and this is of course what we are picking up from agencies, and Indus Tower has taken a knock on account of that. We understand that there's fresh supply of Indus Tower shares that might come into the system, and that's because Vodafone is looking to sell the entire 2.3 billion stake in Indus Tower in the coming week. They've hired the bankers for it already, and there could be this big supply that might hit the screen. Vodafone, remember, currently owns 21.5% of the Indus Tower stock, and a large part of it, or the total part of it actually, could hit the streets. Let me quickly toss it to Kunal first on Vodafone Idea and Indus Tower. Do you have a view, Kunal?
So I think Vodafone Idea is interesting. That's a stock which is now consistently holding the levels of 16. So I think 15.5, 16 is a very strong positive range for Vodafone Idea. And that's a chart which I would believe could head towards 17.5 levels. And because of the beta nature of the stock, we may see those moves pretty quickly into the stock. So would be bullish on Vodafone Idea. And for Indus Tower, I think the stock had a fantastic move. I think till I think Feb or March 2024, where the stock had moved up towards 360 to 380 plus mark. And I believe after that 50% kind of a jump in a span of I think 3-4 months for Indus Tower, I think the stock is going to a patch of consolidation. So in case if the stock dips down towards 320, 315 mark, that could be a very good level to buy.
Okay, that's the take coming in on Indus Towers as well as Vodafone Idea. Let me also welcome on board Gurmeet Chadha too and find out what he's making of the market right now. Gurmeet, hi, afternoon. Is the market in any mood to rest? Because it really seems a one-way street up since Wednesday post the verdict.
Well, it always seems like that, and actually when the markets are going up, the risk is actually going up. And when it's falling like it did on 4th of June and other days is actually when. So you got to be selective. I think it's easy to get carried away. I think market is trying to build in budget expectations. So if you see some of the rural economy, some of the consumption stocks are going up, the housing finance companies are going up, and the economy facing stocks are making a comeback after the correction we saw post elections, whether it's railway stocks or the defense stocks, they're again back to after correcting 20-30%. So I'm just saying you've got to be a little selective now. And I think probably need to temper down expectations a bit. That's the only risk in the market. Rest, I think India's story is solid.
Your story is clearly solid. But Gurmeet, just wanted your specific take if you track the telecom sector and Vodafone and Indus Tower closely, because that's the news that the stocks are reacting to. In fact, Vodafone Idea right now is up 4.5%, and that because this news of $2.3 billion worth of stake sale, I think it could help Vodafone to a large extent, because of course the debt is way too high, but they have been converting part of the vendor dues, and this $2.3 billion will surely go a long way after the kind of fundraise that they have done. Though of course Indus Tower is reacting negatively because of the increased supply. But what do you make of the future for Vodafone Idea, if anything?
No, I think one thing the market is not trying to price in is that it will survive. And I think the first worry was that whether it will survive or not. I think the bigger worry from an investor point of view would be how quickly it can build network, how quickly it can win back the lost market share. They've lost more than 21 crore subscribers since the merger, and they continue to bleed every quarter. Second, if you see the debt levels, their EBIT is currently at about 12,000 crores, and the debt servicing is 3x of that. So I think, you probably need more capital and all, on fundraise, you can then, leverage more and take more capital. So it's going to be a long haul. And at some point of time, there could be some equity dilution as the debt, the delayed spectrum payments approach maturity early next year. So I'm more happy playing it through Bharti, to be honest. I think it's clearly on track. The, the mobility business continues to do well. It continues to add the highest 5G additions quarter on quarter, industry leading ARPU. The home and the broadband business also continues to do well. And I think it's got re-rated. And for the first time, I'm seeing 15,000 crores of free cash flows in Bharti after adjusting for all the debt payments, which means there'll be a very good financial leverage as well, other than operating leverage due to ARPU increase. So I think it's a more steady play. I agree, Vodafone probably the risk reward is higher, but I would still avoid.
Okay, that's a clear avoid coming in for Vodafone Idea at least. But Gurmeet, again, what about names like ABP Siemens? They're almost like Trent. I don't think valuations is a parameter that you even judge them with.
No, it's difficult to put incremental money in these pockets, Aisha. And so ABB is 50 times EV by EBITDA, 80, 90 times earnings. I know probably the next 4, 5 year order book is probably in the price. Same is the name case for Siemens and some of the defense names where you're probably factoring in most of the order book for next 3, 4 years. So any rise in commodity prices, any pullback in the orders, right now I don't think the market is factoring anything of that. So while we have a lot of cap goods and infra plays, but I don't think so incrementally you can still add some PSUs like NTPC is still at about 18 times. Power is we are power deficit. We'll continue to add more both thermal as there will be a spin-off of the renewable business. Power grid is another one which is at about 18 times earnings, 5-6% dividend yield. So those are some pockets. There are a couple of railway ancillaries where probably still we see good margin expansion, and it's got to be, as I said, very selective now. And as I said, temper down. I think the worry is that people are getting used to this 30-40% returns, which we know and history tells us are not sustainable year after year.
Point taken. The other important talking point for the market is the big action of late that we have been seeing in the primary market and through, of course, those block deals, etc. as well. A lot of Ps again making time while the sun shines per se, because making hay while the sun shines, because they have been booking out profits of a lot of companies. And talking about booking profits, looks like Vodafone Idea is also going on the same path. But in the meantime, Hyundai's IPO is likely to hit the street very soon. In fact, today they would be filing the papers with SEBI. That's the exclusive story that Anurag Joshi, my colleague, has picked up. Let me take it across to him to find more details on this one. Anurag?
Likely to file is draft red herring prospectus with the Securities and Exchange Board of India as early as today. Now, this is one of the most coveted IPOs for 2024, and it is coming at a time when there is a surge in the pace of IPOs in the country. And we've had two recent IPOs, including Ixigo and also Office. Hyundai Motor India IPO, the size is estimated at around at least $2.5 billion. So if this IPO is successful, it will be in the league of what LIC had done in 2021. It's one of the biggest IPOs, and Hyundai itself is one of the oldest foreign automakers in India. Hyundai started business in India in 1996, and at a time when Maruti was probably the only automaker during the 90s, it came in and it launched brands such as Santro and Alto. So this is an IPO the market will be watching out for.
What's your take with about this latest IPO? Of course, Ola might happen soon as well. If you have studied it, what are your initial views on it? And if not, nonetheless, what's the view on the auto sector?
No, I think I'm very constructive. I think it's going to be one of the largest IPO, and there's a potential to re-rate the entire auto value chain. What has happened is, Anisha, is that if you see the entire world has been on EV, and only after Toyota did a study on that hybrid could be the future, is when people have realized that you need ICE parts also. So China was a hub, it's moved to EV. Europe has its own set of problems, supply chain, and Ukraine is another strong country which was on ICE auto anks, which is obviously undergoing warlike conditions. So Indian auto ancillaries, there's hardly been any capex done on, let's say, fabrication, let's say forgings, etc. And a lot of the IC parts. And I think a lot of companies may make a comeback. One of them which has done recently very well, and we continue to hold for a very long time, is Uno Minda, which is both it's a nice mix of content, convenience, as well as the EV portfolio in the car. And then you have Sandhar Technologies, which actually makes the frame and the locks for two-wheelers, and then it's moving into EV portfolio, getting into fabrication, etc. And there are many more, a lot of forging companies, fabrication companies. So I think that one space could see some, beautiful operating leverage because there's hardly any capex there. So we are constructive there on the entire value chain, and also look at some of the two-wheeler names and farm equipment plays as government gives a little bit more to the rural economy. There is still some distress there, which was evident in the poll outcome in key states, and there are state elections coming up in Maharashtra, in Haryana, in few more states. So there will be more focus on the agri side as well, which augurs well for even two-wheeler companies.
to mark what the European markets are up to, because we clearly seem to be following a completely different tide altogether. We're down almost 1% for the DAX. The FTSE, of course, is more just mildly soft, but it's a solid almost 2% cut coming in for CAC. FTSE MIB is now around 600 points, and that's a good 2% fall. And even the Europe futures are not really indicating the best of starts. We're down 250 points in the Dow futures already. Nasdaq and S&P still a little bit quiet, but trailing in the red for sure. That said, Gurmeet, you were talking about as to how the markets are already building in the budget expectations. What are the expectations from the market for the budget this time?
So, I think the focus would be rural and urban, poor and people who are, still struggling. Already, if you see the housing finance companies have ramped up in anticipation, there will be more housing announcements. Just look at Home First, look at Avas, look at, Shriram of the world. Bajaj is coming up with a housing IPO soon. So there's a run up there. There is some expectation building up in the consumer names and the rural focused names. We've seen a bit of a recovery even in agrochemicals from where they were, let's say, about a month back. So I think market is trying to build that up, and that's why I'm saying you got to be see how much good news the budget can carry. But government has more space. The fiscal deficit is 20 bips lower. Also, the RBI dividend, so they have a little bit of elbow room to do both capex and investments, and be a little more populist and be more rural facing. Having said that, one development which I'm watching outside budget is can the gas come under GST? And I think that would be a big re-rating for the entire gas value chain. And a lot of these states which are gas producers, which is AP, UP, Rajasthan, etc., they are mostly NDA states. And if they can get gas in the GST, there would be input credit for the companies on the value chain, and the effective taxation also comes down a bit. So want to see that what would be the slab rate, and also that's one interesting space. And those companies haven't really moved much, whether it is producers like GAIL, whether it is some of the the gas distribution, city gas distributors, etc. So that's one space I'm keeping a close watch.
Then we'll ad lib. Right, okay. That's the take coming in on the markets right now. Balrampur Chini, that's of course one stock which has been lower in trade today. Oracle Finance, Emphasis, they're all seeing some weakness coming in. And yeah, of course, IT as a pack is definitely being weighing heavy on the market. Gurmeet, is IT a clear avoid, barring those sporadic moves that we see, or is there some meat in investing right now in the IT pack?
No, it's never clearly avoid. You don't know what goes up, right? Market, the cycles have shortened. I think people have written off pharma and banks also at some point of time when interest rates were going up. And we've seen people have written off PSUs a couple of years back. Who would have thought that the market cap of PSUs will go up from $200 billion to more than $600 billion? For the entire space, some of them have gone up 5x. So never write it off. And I think valuations are reasonable in some of the large names like HCL Tech, even a bit of Tech Mahindra with new leadership coming in. But I think the focus has to shift from services to more products, software, and platforms. And I think so. So a lot of small IT companies, like KPIT, which specialize in CASE, which is connected, autonomous, shared electric, which is the auto software. If I were to club that, some niche names more, I think is where we are focusing more. HCL is doing very well on the software side. I don't think so. The market is capturing the work they are doing. It's a 25% plus EBIT business for them. Currently, it's clubbed in the main company right now. And then you have, these platform plays like Zomato and Policy Bazaars, etc. of the world, which I think have great potential the way it's scaling up. So I think you need to have a combination of, ARDs, software business and platform business with IT, and maybe a little less on services for a couple of quarters. Once US recovers, maybe even services may look good.
For now, find those niche IT plays and not just those services companies, and maybe ER&D is still something which is quite positive. I wanted to bring back the focus to the auto space, and especially M&M, because that's managed to top Tata Motors market capitalization and has gone ahead of that. It's now the second most valued auto company in the country, and we just had those exclusive information also coming in from the Mahindra Investor Day, which is underway, wherein Mahindra is likely to start the production of three new models between October to November 2024, and Mahindra XUV, E8 and E9 to be launched in India by Jan 2025. Kunal, what's the view on M&M as a chart? Because it's been doing very well of late, and today, of course, it's at record high level. Time to book some money out, or just continue to be with it?
I think continue to be with it. The charts have been very strong. M&M had been one of the top leaders, I think, from the auto pack when it started the rally from I think 750, 800 mark, mid 2022. I think from there the stock has just moved on, strength after strength. Even in the last few months, there has been hardly any major patch of price correction for the stock. But the stock has gone through those sideways ranges for quite some time. So I think that generally has neutralized indicators for M&M, and I think that's why the indicators are nowhere near the overbought territory, at least on the monthly charts for M&M. And I think that's where I would probably believe that the stock should inch up higher. 3,000 could be a strong psychological target for the stock over the near term.
Right, okay, that's the take coming in on M&M right now. Has scaled a fresh peak for itself today too. And actually, I overtaken Tata Motors also in terms of its market cap. But what's the dealing room chatter like? Sharad is here from with all the buzz from the dealing rooms.
Well, yes, in focus is Aditya Birla Capital, and what we are gathering from dealers is that there might be a block likely next week. Now, interestingly, the company is expected to meet certain FIs in an investor conference in Singapore between 18 to 19 June as well. Now, FIs have roughly 11.8% stake in the company. Of course, the numbers recently had come, Q4 numbers, they were largely mixed set of numbers, but the street is factoring in something which is important, which is the recent stake sale in the AMC that's expected to boost the capital further by almost 650 crore rupees. And two important things coming as guidance from the management. The first one being that the NBFC business is expected to grow at a 23% CAGR from FY24 to FY26. And also the higher AUM growth is expected in the housing finance business as well. So a lot of positive triggers coming in for the stock, and that's what we are gathering from the dealers, is that there might be a block deal next week.
That block deal in the coming week as well. Thanks, Sharad. But in the meantime, let's take some BTST idea from Kunal. Kunal, anything on the BTST radar or STBT?
Yeah, BTST, so two ideas over there. First one is one Federal Bank. That's a chart which has come back into a breakout mode. Again around the 174 plus mark. So would suggest a target of 183, stop loss at 167. And Balrampur Chini stock, which is actually down 2.5% today. Go for a contra buy over here at current levels. Look out for targets of 445, stop loss at 418.
Right, okay, that's the take coming in on some of those BTST names. Gurmeet, then what's the strategy really as we approach closer to the budget, which should hopefully be around next month, last week perhaps, or at least latter part of next month? Do nothing, just sit tight?
I think to a large part, yes. I think just enjoy sometimes. It's good to enjoy the gains and be happy about it. And wait for bargains. Days like 4 June come, once in a while. But last 40 years, if you see, every year there's been a 10% correction. And I think India remains a buy on dip. So be selective. There's no harm in being a little counter-cyclical, going towards names where probably a lot of bad news is in the price, and maybe rebalance the portfolio a little bit. I think wherever you have made 4 5x in, let's say, PSUs, railway, defense name, I'm not asking them you to exit, but limit, take some money off, get into, let's say, something like banks. So if you see banks, 25% EPS growth, but because of FI selling, now Nifty is only 13-14% up for last 2 years versus Nifty above 20%. So there's some catch up there. And as and when FI has returned, they will at some point of time, there will be some bit of catch up there. And as I said, bit of agrochemical names, maybe deep dive a little more into IT and pharma. Have a little counter cyclical portfolio, something which is out of favor, and also look at bonds. I've been saying this for last 6 months. The 10-year bond is now down to 7. It was 720 a quarter back. You will see a shallow rate cut cycle in next 12 months, which means even a bond portfolio can deliver double-digit return. So be a little more balanced and as I said earlier, temper down the return expectations.
Kunal, is there a possibility, Kunal, that there could be a long stretch of consolidation which could perhaps last a month, or is it too early to say that right now?
No, I think that should not happen, because given the global context where the global markets are, I would believe that the markets should continue to trend up. We've discussed many factors, the VIX, etc., and I think that should also aid to the market rally. So maybe consolidation could be defined in a different manner this time around. Maybe not a 1% band for the index, but it could be a broad-based consolidation. So we could be looking at a 600 to 800 point range for the index at 23,800 as a fresh resistance on the upside, and closer to 23,000 as a fresh base.
Okay, point taken. Just wanted to kind of hash out that point of counter-cyclicals with Gurmeet a bit. Gurmeet, would insurance fit in that definition as well? Has been in a lot of those regulatory challenges, that surrender value issue was there. But now everything, at least for the time being, seems to be out and known. Would you buy insurance? Because take a look at LIC today. Finally, that elephant is dancing. 6% move today.
I think there is some valuation comfort in LIC. It's still less than embedded value. It's almost around the IPO price. It's just that the new business premium and the new business premium margin has been slightly lesser. They probably need to have a more diversified portfolio. HDFC Life also from highs of let's say 750 plus, it's still sub 600. It has one of the best metrics both in terms of the new business premium as well as the persistency ratio, which is policy crossing 3 years and 5 years, because insurance is a long gestation product. So maybe tactically it may make sense, but I'm more constructive on capital marketplace. The broking names like the Angel or the Motilal Oswals of the world, the CAMS and the CDSLs, which is the RTA and the depository, some of the exchanges. Because here, if you see, we've just touched probably 10 crore unique customers. We have just about 4 crore unique SIP holders. I think this number is only going to go. For me, that's like a 5 year, 10 year, fill it, shut it, forget it kind of a play. And most cases, there is a duopoly, whether it's a depository, whether it's, the RTAs. So which means that, it makes more. So I'm more focused there on non-financials than on insurance. I like some non-life insurers like ICICI Lombard, etc. But life insurance, we have very, very little exposure.
Take there as far as insurance is concerned, but perhaps some capital market plays are better placed. On that note, Gurmeet, we'll let you go. Thanks so much for making time and speaking with us today. But in the meantime, since we're on the subject of insurance, let me bring on board my colleague Anurag Shah as well, because the general insurance data or the non-life insurance data was out. And on account of that, the insurance stocks were buzzing around. Anurag, tell us the details.
Non-life insurance industry has shown a growth of 15.47% in month of May, and it has continued the double-digit growth in month of May also. If we talk about the premium, then it has increased from 18,000 crore last year to 20,822 crore. Standalone health insurance companies has shown a growth of 26%. If we talk about the listed players, then the market leader New India Assurance has disappointed. They have shown a flat growth, and in a percentage term, the premium growth is minus 0.67%. But ICICI Lombard has shown a premium growth of 21.67% as compared to last year May. Other listed player in a health insurance space, that is a standalone health insurance company, Star Health has also shown a premium growth of 16.2%. And the new entrant in listed space, a recently listed company, Go Digit General Insurance, has also shown a growth of 36%. Although the base is small, so the good growth, 36%, is visible. If we talk about the market share of listed companies, then New India Assurance market share is at 15%. It is reduced from 17% last year. For ICICI Lombard, it's a 10.8%, Star Health 4.3%, and Go Digit, it's 3.31% market share.
Okay, surely we are keeping an eye out on those insurance stocks, but how the day is ending, especially for ICICI Lombard, since Anurag just mentioned about that. ICICI Lombard at one point of time was among the top F&O gainers, and seems like it will be closing with gains of almost 4% for the day. Let's look at the Nifty now, because yes, just half an hour back we did see the Nifty actually touching new record high levels. 23,490.4 was the new record high for the Nifty, and it touched that and again came back to the range that it had been trading in on those 23,450 levels. So keeping an eye out on that. We also have the Nifty Bank, which managed to see a up move as well, and yes, at one point of time it was that 50,000 mark came in again for the Nifty Bank. 49,976 is what the Nifty Bank will be closing at. Broader markets even today continue to see an outperformance, and obviously what we're seeing in terms of an up move coming in overall, even for the realty pack, Nifty Realty was surely among the best performers for the week in terms of overall the sector that you look at it. So keeping an eye out on Nifty Realty, because this is the record high level, and top sectoral gainer what we saw, Suntech Realty, Phoenix Mills, all of them were leading gains for the stock. Other than that, let's also keep an eye out in terms of what we saw in terms of leading the gains for the week for the Nifty was Shriram Finance, Ultratech Cement, which led the gains. And today we had Ambuja Cement, which was buzzing in trade. After the acquisition came in, it acquired Penna Cement. So yes, keeping an eye out on Ambuja Cements. Also, we had Adani Ports that was in focus, trading in on the positive side after we had a brokerage note that came in from Kotak Institutional Equities, and a positive note there, and that is why Adani Ports managing to hold on to gains. Let's pull up the M&M group companies. So Mahindra and Mahindra, firstly, when you talk about that, that is the one that is holding on to strong gains. Leading the gains for the Nifty 50 today was M&M, and all the other M&M's, Mahindra group companies are in focus on the back of overall the investor day meet that they had. Other than that, let's keep an eye out on some of the other movers in the Nifty 50. We had Eicher Motors, Titan, Shriram Finance, which managed to hold on to decent gains. And other than that, in terms of the mid-cap space, what led the gains was Mascow Dog, Bharat Dynamics, Bharat Forge, as well as Vodafone Idea choked up in trade. In the last half an hour of the trading session, we saw some reports that were coming in for Vodafone Idea, and on the back of that, we saw Vodafone Idea choked up in trade. Max Healthcare too managing to hold on to gains. Indian Hotels and JS Infra among other gainers in the mid-cap. While let's move on and talk about some of the losers on the mid-cap front. We did have Oracle Financial Services, which after a couple of days of gain, today saw a bit of a decline. That is Oracle Financials, Ipca Labs, UPL, all of them a bit subdued in trade. But all in all, Nifty managing to close on with gains of 23,000 and 453 is what we could say for the Nifty. Sensex at 76,949 for the week. Keeping an eye out on that. Not a bad week because Nifty managed to hit a record high level. We had the mid cap as well as the small cap also hit record high levels during the week. So that's a goodbye on this edition of Closing Trades with a positive end for the markets.
If you like this video, then like, share and subscribe to ET Now.